In this video, I want to talk to you about the secret sports betting edge that most people just miss when they're trading. This edge is one of the clear, big, undeniable differences between a losing trader and somebody who wins and makes money out of the markets each and every month. And in this video, I want to talk to you about how I made every mistake in the book, lost every month of my trading, started implementing this technique and this edge into my own trading, and went from a losing trader to a winning trader, making profits out of the market with each month that goes by. Okay, so when I first started trading in these pre-off horse racing markets on Betfair, I fell right into this trap as well. I didn't make any money, and for the longest time I stressed myself out as I simply just didn't have the right approach to trading in the pre-off horse racing markets. There are now two quotes that I absolutely live by with my own pre-off horse racing trading. Now these quotes are pretty simple, but they are so powerful. Now number one is look to enter the market when most people are looking to exit the market. And number two is be fearful when most people are greedy, and be greedy when most people are fearful. Now I believe one of those quotes is a famous quote from Warren Buffett, and the other one I'm not entirely sure where that one came from. I think it come from some YouTube video I watched a while back from some successful financial market trader, and it just sort of stuck with me. But what are these two quotes getting at? Well, fundamentally what they're effectively saying is be contrarian, go against the crowd, stop copying and following along with what everybody else does, and you'll be successful and make money out of these markets. Now if you think about it, this would make perfect sense. In financial markets, depending on what source that you look at, it's estimated that between 70 and 90% of financial market traders lose money. And as Betfair and the exchange is trading as well, you would expect a similar number to be true on that platform. Now granted, you do get people like value bettors and match bettors who are laying off their exposure on the exchange, but by and large there are a lot of traders active on the Betfair exchange. Now logically, you would expect most of those traders who are active on the Betfair exchange to be long-term losing traders, so the quotes, look to enter the market when most people are looking to exit the market, and be fearful when most people are greedy, and be greedy when most people are fearful, would make perfect sense. Now for me personally, I know that I used to continually lose month after month when I was trading in these markets, and this wasn't through the lack of effort and determination of trying to become profitable, but something used to happen to me all the time, and I'm sure you can relate to this yourself if you're trading in these markets, and it would almost be like there would be some sort of mythical, magical aura looking over me, making me do the wrong things in the market at precisely at the wrong time. So I would enter my position into the market, and very shortly after that the market would then start to move against me, and I would start heading further and further into a loss. And as I head further and further into this loss, the pain and the pressure and the psychological torment of that screen becoming redder and redder and loss becoming bigger and bigger started to get to me, so I hit the hedge button on my keyboard and cashed out my position. And sure enough, just as soon as I'd done that, the market would then start to move back towards where I started and where I entered my position in the first place. And fundamentally, if I'd have just held my nerve, relaxed, not let the noise get to me, I would have ended up break even or maybe even making a small profit. But because I'd let the market move against me and freaked out when it did move against me, hedge my position, I ended up taking a big loss. And this pattern would repeat over and over again. And for many months I was almost blind to my own behaviour. But eventually, after months and months and months of watching the markets and going over my screen recordings, I actually started to pick up on the fact that I was continually doing this. So the question at that point inevitably then started to become, why do I keep making this same mistake over and over again? Why do I keep getting involved with the market then moves against me and I cash out for a loss, and then the market moves back to where it started? You know, I'm not a stupid person. I have a pretty good job, I have respect, and I know how to treat people with respect. I can treat people politely, I use manners. I'm just pretty much the definition of your average everyday person. But yet when I was in these markets, I continued to make these same mistakes over and over and over again. And what I started to realise, and the funny thing is that most people are just like me, they're just the definition of your everyday average person as well, but yet they still can't get it to work, and they still fall victim to this kind of weird mystical aura trap which I've been discussing, which impacted me. So if you do relate to this yourself and you've been through this yourself, you're probably asking, well, what is this like mythical aura which kind of makes you get into the wrong positions and then the market just moves against you? Well, it's these guys on screen right now. Cognitive biases. Now, cognitive biases might look a little bit boring or a little bit confusing, but believe me, most of them are actually pretty simple, and they're just things and little weird mental flaws which the human brain falls victim to over and over and over again when it becomes under pressure. So I'll give you a market example of this right now, and the first part of this market example ties into 3 cognitive biases. So imagine a horse is drifting out in price. It started at this price down here and it's now drifted all the way up to this price up here. People clearly don't like this horse and the price is clearly drifting on the horse itself. So the temptation here is to follow along with what everybody else is doing. The price clearly started down here and it's clearly drifted up all the way up here. And because everybody else is laying this runner and betting against this runner and the price is drifting up, you start to feel an overwhelming tendency to follow along with what everybody else is doing. Because if everybody else is doing something, then everybody else must be right. So here we have herd mentality. We don't want to look foolish by not following along with what the crowd is doing. It's almost like if you're at a football match and 20,000 people sat around you all collectively lose their mind at the exact same time. If the referee gives a decision against your team, you're more likely to go along with this crowd and be angry yourself, even if the referee actually made the right decision. Or kind of like how everybody copies each other into buying the latest cool fashion item, regardless of whether or not they actually like and find the item fashionable. And this is because, as human beings, fitting in is super, super important to us. It's the same thing with this drifting horse and the price moving out on this runner. And once we become one with the crowd and we fell into this psychological flaw and cognitive bias number 2 starts to rear its ugly head. And that is the fear of missing out. Quite simply, we don't want to miss out on all the lovely profits that are going to come along with laying this horse down here and backing it at a higher level as the crowd and the herd lay this runner and the price drifts out, especially if other people are going to be making money and we are not going to be making any money and we're going to be getting left behind. And this bias predominantly ties into human greed. It's kind of like where everybody keeps buying the latest cryptocurrency or one of these meme coin type things, thinking they're going to get rich super quickly, and because they can see other people have made money from it, and they know some people somewhere who's become millionaires from buying these crypto things or meme coins, they feel an obligation to do it because they don't want to miss out on all the lovely rewards, in this case profit, from doing this one simple thing. So as you can see, we're already starting to develop this cocktail of cognitive biases which is all starting to bubble up to the surface. So there is one more bias that is going to force us into placing our trade into the market and being bullied by our own internal psychology, which is hiding away in the back of our minds. That bias is good old confirmation bias. Now I'm pretty sure you already know what confirmation bias is, but if you don't, confirmation bias is where you look to support your existing belief and disregard any other ulterior or contradictory beliefs which could contradict what you're initially thinking. So as a trader, we can see that the price is drifting out on the favourite, and it appears that everybody's making money by laying the favourite at the lower price and backing it at a higher price. We've already developed pre-existing beliefs on this setup. Now, the beliefs that we've developed in the first place, they're not coming from the logical, analytical, common sense part of our thinking. They're actually coming from the more primitive side of our brain, the chimp side of our brain. And if you know anything about human psychology, you'll know that that primitive side of the brain is much faster acting, but it's not analytical and it's more impulsive and it behaves more around emotion, whereas the logical, analytical, common sense part of the brain takes various seconds longer to kick into force. And these 3 cognitive biases are enough for us to place our trade into the market. However, the thing is, what you've done without actually realising it is you've actually chased the price around. And what's the first thing you learn when you get into trading? Never chase the price around. Now, by the way, I probably should just point out, these biases are going on in the back of our minds. You're not consciously aware of how your mind and how your brain is coming to these decisions. But very often, and more often than not, cognitive biases and this flawed way of thinking leads people into trouble. Not just in real life, but importantly for us, in the pre-off horse racing markets on the exchange. But the thing is, as human beings are very habitual, if we continue to make these bad mistakes and develop these bad habits, the problem is going to compound and get larger and larger and larger. So here is the kicker. Because the price has already drifted out so far, so it started down here, it's already moved all the way out to here. If you've just laid it up here, the problem is a smart punter or a smart trader, or maybe a plethora of them, all identify back value because the price has moved out so far in one direction. So what do? They place a back bet using a large stake, which in turn starts to slowly move the price back down the traded volume range. Now it's at this point panic and fear starts to set in, not just for us, who's laid the runner right at the top of the traded volume range, but also for all the rest of the other traders which have fallen victim to this cocktail of cognitive biases and have also chased the price around as well. So guess what comes into action next then? You guessed it, yet another cognitive bias, and this time the cognitive bias is loss aversion. Loss aversion is the tendency where people feel the pain of losing something, in this example cash, stronger than they feel the joy of the equal reward. So as we can see our screen displaying a larger and a larger loss, the pain and the psychological torment becomes too much, and we hit the cash out button on our software to get rid of our position, get rid of the pain and keep our losses as small as possible. And everybody else who has also fallen victim to this psychological trap of all these cognitive biases, they're all doing the same thing as well. They're all cashing out of their positions because they don't like the pain that they're feeling because their position is in a red and they're going to take a loss. And everybody is doing this by backing the favourite to cash out of their position. And as a result, a huge portion and a large percentage of the market is backing the runner, which in turn pushes the price down towards the bottom of the traded volume range. Now, after a little while of this happening and things starting to settle down and calm down, guess what happens next? A similar sort of thing starts to repeat once more, but this time it's inverted and this time it goes the other way around. A new batch and a new section of traders look at the market and they can see, hang on, the price started all the way up here, it's now moved down towards the bottom of the traded volume range. I think I'm starting to spot a pattern and a trend developing on this runner and in this market. So the same cognitive flaws and mental errors come into play once again. Herd mentality, we can see the price has moved down so much from the top of the traded volume range all the way down towards the bottom, and if the herd's doing something and the crowd's doing something, they must know what they're doing and they must be right. The fear of missing out sets in. You don't want to miss out on all these lovely profits that everybody else is going to get by spotting this trend, because if they're going to get the profits, you also want the profits as well. And to top it off and wrap it all up in a nice bow, confirmation bias, where you confirm these two previous biases and think you've spotted an advantage and think you've spotted an edge in the market. And then, inevitably, the same thing starts to repeat once again. As the prices drop so low from the top of the range down towards the bottom, a value punter or a trader identifies value to lay the runner. The price has got too short, they've identified value to lay, and they do so using a large stake. And maybe a few other traders and smart punters do the same, and then that starts to move the price back towards the top of the traded volume range. And again, it's at this point, traders who have chased the price around, fallen victim to this psychological trap, start to exit and freak out and hedge their position. And then if one does it, the other does it, and then the other does it. And then all of a sudden the price moves back up towards the top and back to where it started once again. Now, if you don't believe these things are occurring, and this is how the market moves around day in, day out, start recording your screen, your trading screen, for about a week or so, and you'll quickly start to notice these things happening over and over again. You'll quickly start to notice when you're laying at the top of the traded volume range, very often the price at post time will end up towards the bottom of the traded volume range. Or if you're backing towards the bottom looking for a trend down, very often the price will finish at a high level and drift back up, and will just pretty much do the opposite of what you've done. So after saying this, if we go through the earlier quotes once again, look to enter the market where most people are looking to exit the market, and be fearful when most people are greedy, and be greedy when most people are fearful. Can you see how all this makes sense? Can you see how going against the grain of what people are doing in the market is advantageous and will make you money over the long term? Now, it took me various years to fully understand and fully accept this, but nowadays I see it all the time in the markets, day in, day out, the same patterns and the same processes repeating over and over again. And if you just avoid being greedy, just avoid trying to get rich really quickly like the vast majority of the market, and just take the time to fully understand and appreciate how human psychology works, you'll make money over the long term just from understanding that fact and the psychology in general. However, the weird thing is most people just cannot understand it, or they cannot accept it, or perhaps it's a little bit of the both. And it took me a long time to realise this, but this is effectively how winners are able to make money over the long term in these markets. Now, the people that I work with in my training program are long-term winning traders, and they make their money each and every month by using some of the psychological flaws to their advantage, which I've talked about within this video. It's not complicated, and it doesn't involve understanding the sport of horse racing inside out. I certainly don't understand it like that. And it certainly doesn't involve stressing yourself out like crazy, day in, day out and week in, week out in these markets like pretty much every other trader which is trying to get this to work. So if this sounds like something you're interested in and you want to work with me and you want to make money out of the markets as quickly and as efficiently as possible whilst removing all the fluff which you don't need, which isn't going to help you and which isn't going to benefit you, then check out the link which I've got down below in the description. I'd love to work with you. I'd love to help you out. I'd love to help you become long-term profitable every single month from the markets. And with that being said, next up I'd recommend checking out this video right here, and that'll show you how you can scalp in the markets using a really good scalping strategy, and you can do that by using the psychological flaws and cognitive biases which I've talked about within this video. So yeah, thank you very much for watching this video. I appreciate your time as always, and I'll see you again in the next one.